right. All right. How's everybody doing? Thanks for joining me here today. This is going to be another edition of the playlist on my YouTube channel, Chad's Trading. This is the Trading Quotes playlist. This is the third book I published all the way back in 2022. I like to make my books completely free. And what I've been doing for this playlist, I'm actually going through and I'm reading, every single quote. I'm reading the entire book, and it's going specifically into this playlist. You may know that, some of my favorite quotes are going into the Trading Encyclopedia. But in any case, we're going to jump right into it. Of course, I'm on Twitter at Big Chads, Bitcoin Live, where I'm proud founding analyst, and on Twitter at Big Chads, and YouTube Chad's Trading. We said all that, Chads. Let's get right into it. So, trading quotes, and where are we in trading quotes? Let's go to the playlist. And you can see weeks 1, 2, all the way up to 35, 36. We're going to do 37 and 38 today. Let's jump right into it. So, week 37 and 38. And, I really like these quotes. I think they really just help us put things into perspective, help with the emotional game, help with kind of the mental aspects of trading. So I'm really kind of proud of this project. In any case, Monday, the best entries come from bids far below the current price. So far below that you doubt that they will ever fill, and yet occasionally they do. This is a low ball bid, and you can think about a chart you really like. Maybe it's Bitcoin, maybe it's Zcash, which is pretty strong as of the time of this recording. It could be Ethereum, it could be Apple stock. And you have these really low ball bids. And what happens when the market faces extreme volatility, you'll often see it break through those first and kind of second logical levels of support. Maybe a quick flash down to some weekly or even monthly level. And these low ball bids, they really help you out because, again, most of the time they don't fill. But if you get a fill there, it's usually on a cascading type of drop, and then you get a sharp response, a momentum turnaround. So, these low ball bids are often some of the best ways to start out a position, and it's something I talk about in my books. Tuesday. Until you cut your losing trades, there is no way to learn from them. When you are in the trade, when you're still trying to figure out what to do with it, how to manage it, it's hard to take a step back. And, or especially a losing trade. And I often tell people, people will hold on to losers for a long time and they'll kind of never get out of it and they'll never learn from it. But I always recommend you just sell and move on. And once you've sold, and you've begun to move on, you can step back. You are a little bit disconnected from the experience, from the emotions of that trade, and that will allow you to find some perspective, to find some understanding of how you got into the trade, and what you can learn from it. So so maybe you don't do the same things next time. So, honestly, cutting your losing trades is really good because then you can step back and say, okay, what did I do? And how can I avoid getting into this mess again? Wednesday, anybody who says that they know what's coming next is guessing. Instead of predicting, just wait and find out. And, I'm not immune to this. There are times when I have really strong conviction. I'm trying to make a clean call, but most of the time it's just a best guess. So I do try to caveat it. This is my best guess. This is what will probably happen. Again, based on my best guess, based on what would be logical, based on the momentum story, based on how the trend has been consolidating, that type of thing. So it's just to understand that the people who tell you they know what's going to happen, they really don't. It's their best guess. So maybe take it with a little bit of a grain of salt. Thursday. As a chart guy, it pains me to say that the bottoms and tops, they can best be measured in sentiment rather than technicals. And that might be a little bit uncomfortable for someone like me, who's a pure price trend analyst. But as you know, I've often said that I use the TA and then I use sentiment. And those two together, I think, are a wonderful combination. And if you look back at the 2022 Bitcoin bottom, I spotted the sentiment bottom on the exact day of the price bottom. I didn't know it was the price bottom that day, but I could just tell okay, sentiment has bottomed out. And that's not something you can necessarily teach. That's a lot of intuition. When is sentiment strong? When is it weak? I mean, I have some background in psychology, and I have a lot of experience in these markets. So it's something I have muscle memory on. I have a good feel on. And it really is true. You see, bears get excited after a move down, bulls get excited after a move up, and you kind of take it all together, the sentiment of the crowd, and you can get a lot of information on that. Friday, never make a trading decision based on taxes. Sell when the trend changes. I'd rather take an extra 15% hit than lose it all. Many, many years ago, there was a time where I was up multi six figures on a basket of positions. And I didn't want to sell because I was saying, okay, I'm sure the market will keep going. And if I just wait 9 months or 10 months, instead of taking a short-term capital gain, I can take a long-term capital gain. I was trying to game, I don't want to sell now. I don't want to pay the taxes. Why don't I just wait? I ended up losing, I think, 90% of it. I ended up going back down. Maybe I made a small profit on it, right? And so this is what this tweet comes from. You just sell when the trend changes. That's just doing too much complicated math. And if you end up holding longer because of taxes, well, where's that in the chart? There's no taxes in the chart. The chart is supply and demand. That's the trend. It's when it's weakening, when it's strengthening. You need to make your decisions based on your trading thesis, when it becomes invalidated, when it, vis-a-vis when it fails. So just don't trade based on taxes. You're gonna get yourself in a lot of trouble. Just pay the taxes. Pay the taxes and move on. Okay. Saturday, the proper time to get excited is after you take profit, not beforehand. One of my other famous, in my own mind famous, one of my more popular rather quotes is, when you send a screenshot to your buddy, that's when you should take profit. Why is that? Well, we're getting excited. I mean, the price has moved, more than we anticipated it. It's really started to work out. Oh, wow, look, I'm up 100%. Well, most of the time, the price has moved too far, too fast. It's overextended. It's going to have a mean reversion. It's going to come back and give away some of that. And people know it now. You can see collectively there's memes where people say, oh, I just wish I'd taken profit instead of sending a screenshot. And it's very true. So you can get excited after you have locked up profit, not beforehand. So that is the proper time to get excited. And if you see yourself getting excited, maybe take some profit. Sunday, if you're worried about the news, then just focus on the chart. The price either holds support or it does not. Stop making things more complicated than they need to be. Right now, it's the Iran war, it's the this and that, it's the Clarity Act. I just see zero alpha in following the machinations, the day-to-day machinations of the news. The news is designed to pull your emotional strings, to pull your heartstrings. They're gonna run you around in a circle. There's no alpha there. The price either holds support or not. I mean, the market will tell you if the news is important. So why would you spend time trying to figure out the news? Just watch for the reaction and trade accordingly. Week 38. All right, week 37 through 38. And by the way, I'm sorry I haven't. I'm a little bit late to get this video, but I'm going to get the whole book done. That's my promise to you. Week 38, Monday. Today is a great day to start taking your trading seriously. Have a well thought out plan and respect your stop loss. And with that, your money. Too many people, and I see it, I've done it myself many times earlier in my career, too many people just enter a trade and they don't have a stop. I just like it. I want to buy some. And then they buy it at 500 and it's down to 200. And they're like, oh, I wish I'd done something there. I wish I'd sold. Well, you didn't define your risk. Every time you take a trade, you need to know when it fails. That means a well thought out plan. And you have to respect your stop loss. You have to stick to it. I entered the trade because it had a breakout. But what if it failed to hold in the breakout level and it came back? Well, you have to sell now. You don't look for other reasons to hold on to the play. Your idea has failed. Move on and then look for the next best trading opportunity. Tuesday, you should keep in mind that most people you follow on social media, they have no idea what they're doing. So you might as well rely on yourself and grab a textbook. Just rely on yourself. Your trade should come from your watch list. It should come from your muscle memory, your instinct. You have to build up that experience. You can't be the blade of grass blowing in the wind. You can't be impressionable. I see it right now. A lot of people on Twitter are throwing out charts, divergence, things, and they just don't know what they're talking about. They've never studied TA. Certainly not professionally. Certainly haven't read any textbooks. They're just kind of winging it. And then the people who are following them think, oh, wow, look at this alpha. These people don't know what they're talking about. Just rely on yourself, teach yourself, and then you can hold yourself accountable. It's the only way you'll succeed. Wednesday, momentum has a way of making itself clear if you are willing to be observant and to look for clues in the price action. So how do we know when a downtrend is turning around? Well, we know because the price will, recapture a lost support level. We'll see a volume cluster at the bottom. We'll see higher low structure representing increased buyer demand. We'll see the momentum turning around. It will make itself clear. All the clues, all the information you need, it's in the chart. Okay, just be observant, pay attention, open your mind, and you can get it all from the chart. Okay, Thursday. This is a big one. Declining volume is not bearish. Rather, it's expected in most consolidation patterns. This might be one of the most common myths in technical analysis. So, like a big flagpole, you get some volume in the initial advance, and then it's consolidating. And people say, "Oh, or it's just it has a breakout and it's slowly continuing from the breakout level. Where's the volume?" They say. Well, if it's an uptrend, you don't need volume to continue a trend. There's already an imbalance in supply and demand. If it's an uptrend, you have more buyers than sellers, so the price will go up. You get volume when the counter trend force steps in and tries to take over. So declining volume is normal. Every consolidation starts out with big volume, trails off, and then you have volume again when it breaks out. That's just how it works. All right, Friday. Take note of relative strength during market-wide drawdowns. When everything is dropping, when everything is crapping out, pardon my French, when everything is just falling apart, a couple things are doing okay. Oh, this thing, there's always a few charts that look like they don't even know that the rest of the market is puking. They have no idea Bitcoin dropped 6% or 8%. They don't know. They're still holding their MA50. They're still holding, their stair-stepping level. The prior resistance is turned into support. Follow relative strength. Always take note and pay attention, because when the market settles, the participants that had that relative strength are going to do better after the fact. So you always want to pay attention, and you want to position yourself and not throw your funds at it, but use your funds in the direction of relative strength. Okay. Now, generally speaking, shorter patterns are more common and less reliable with pattern breaks. On the other hand, longer and more complex patterns are less frequent and more reliable. The best are in the middle of both frequency and complexity. This is just a rule from classical charting. So just a very short pattern, we've covered in other videos, a video on the concept of like patterns morphing, where like a bear pennant can turn into a rectangle, that can turn into a head and shoulders. And so the more mature the pattern, the more time the price is spent in consolidation, the more reliable it's going to be. So this is just an interesting rule of thumb. It's a fun quote. And so you just want to think about that. A very quick, short pattern. Yeah, wait and see. It may morph. It may grow into a larger consolidation range. Okay. Now, Sunday. It is a marathon and not a sprint. You need to give yourself time to both make mistakes and learn from them so you can keep on going. It's definitely a marathon. So how can you grow and learn if you're not making mistakes? What do you have? What are you learning from? What lessons are you drawing? You have to make mistakes, but survive them. Smaller positions, use your stop losses, use your trading journal. So you got to understand it's going to take time. You're going to take your licks. You're going to make your mistakes. But each of those mistakes is an opportunity for you. Each of those mistakes is a chance for you to grow and become a better trader. And never forget that. So weeks 37, 38. Next time we'll do 39, and then we'll have the favorite quotes. You know what? While I'm here, we might as well do week 39. So my next video, I can flow right into favorite quotes part 3. So let's just do week 39 while I am here, okay? Monday, slow bleeds rarely lead to a bottom. And it's the idea that you need a momentum overextension, right? You want a big sharp dip below the lower Bollinger Band. So you get a snapback reaction, a slow bleed into a price level. It's less likely to hold than a sharp drop because, again, you get that rapid momentum, which is an overextension. So this is a very important concept. I have videos on these in the Trading Encyclopedia. Tuesday, I love this. If you are watching more chats than charts, your system is broken. You know, a lot of people just hang out in chat rooms. They're waiting for their paid group leader. They're waiting for their buddies to tell them what to play. Oh, what should I play? What's good? What looks good? They're just relying on other people to throw out a few letters, a ticker there, and they're just going to jump in with no preparation, no understanding, no plan, and then they just end up getting demolished. And they say, what happened? You got to watch your own charts. You should have a curated watch list, 10, 15 plays that you have muscle memory on. You understand the ins and outs of those charts, and that's where you draw your ideas from. You have to be self-reliant. That's a very important theme that I've been touching on here. Wednesday, technical analysis operates on the assumption of freely traded markets with prices that travel in trends. Our primary job, our most important job as a technical analyst, is to profit from riding that trend. And while we're doing that, we're watching to see if it weakens. So you watch for a trend to dip. You look for a movement against the trend. You take advantage of it. You buy a dip in an uptrend. You sell the rip in a downtrend. And then you ride the resumption of that trend as long as you can. You take some profit. You know, maybe you sell half at 100%, which would be nice, right? And you hold the remaining and you watch to see when the trend weakens. Very, very important. We want to just ride trends, right? We don't want to be trying to fight the trend. We don't want to be playing reversals. We're going to get ourselves in a lot of trouble. Now, Thursday, it really doesn't matter what you trade as long as you've been watching and understand the chart rather than chasing some shiny object. That's just like watching more chats than charts, right? You're chasing shiny objects. You see people tweeting a ticker. Oh, I got to get some. I have FOMO. Whatever you play, make sure it's your watch list. Make sure it's something you've been studying, you understand, you have a feel for, because you need to develop instinct. You need to develop muscle memory and intuition. Otherwise, you're just not going to survive. Friday. Oh, I love this. The more upset you are when somebody calls your favorite project a scam, the more likely it is that it's actually a scam. And why is that? Well, some of these cult coins, the SPX meme coin, or XRP, even Litecoin. You talk to these people about it, and you can't talk to them. The diehard believers, because they don't care about the price. It's all about the technology, the freedom, the future. That's just cope. They're coping. They are absolutely coping because the chart's terrible. They're way down on their position, and like, you should just not care what people say about a play. Like, whatever. Everyone has an opinion. Like, if everybody agreed with you, the price would never move. We need disagreement. We need to embrace the disagreement. So if you find everyone super like getting super upset and they're really freaking out when you call it a scam, it's a scam. It is absolutely a scam. Because if you knew it wasn't, you wouldn't care. Let people talk. Let people say what they're going to say. Saturday. I would rather sell early for a profit than late for a loss. And this is debatable because it's a stylistic type of thing. it is true that the biggest gains come from letting your winners ride. I tend to play small ball. I tend to grind it out. I'd rather just take a little profit, scale out, take some profit, see what happens. Because sometimes people don't sell any because they're thinking, you know what? This 2x is not good enough, or this 30% gain is not good enough. I need to double my position. I need to triple, end up making nothing. So this is just the idea that, every time you take profit, every time you sell a little bit of your position, it just makes it easier to manage the remaining position because it is a smaller percentage of your risk assets. Okay. Sunday. My biggest trading losses come when I enter in the middle of the channel rather than buying on a support retest or shorting at resistance. That no trade zone you hear about, it's real. And if you respect it, your portfolio will thank you. There's a lot of stuff here, right? What is the middle of the channel? Let's say you're looking at a bear. Let's look at a bull rectangle, right? The price advances. You have an upper boundary and a lower boundary. And if you jump around, you try to enter in the middle of the channel, you're going to get chopped out. It's much harder to define your risk when you play either at a support retest, the bottom of the channel, or shorting at resistance, the top of the channel. You can define your risk because it's based on a clear horizontal zone, a clear nearby horizontal level. And a lot of people say, look, this is a no trade zone. We're in the middle. We're in the chop zone. And that's when you step back and do nothing. And so you want to be, there's the concept of price interaction with the key level. I have a video on that. I have a video on all this stuff. And you really want to avoid the chop and just wait for the price to test a key area. Avoid the chop. Don't trade in the middle of the zone. All right, week 37, 38, 39. We'll do the favorite quotes in the next video. This is for the favorite quotes for the Trading Quotes book, which is my third book I published in 2022. Trading Quotes, a daily dose of trading wisdom. Really love this book. You're getting it now for free. I'm doing the whole thing on my YouTube. I hope you're enjoying this. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a proud founding analyst. Folks, I really appreciate you. I hope you're doing well. Happy Saturday, and be well, friends. I'll talk to you soon. Big Chads out. Oh, let's dance. Sorry, we'll dance. Sorry, let's do it. And then I'll see you later, too.